Good morning, everybody, and welcome to the Trade Talk podcast. This is Shrikant Chouhan from Kotak Securities, PCG Research. On Wednesday, after the Fed meet, the US markets corrected sharply, and the fall was more than 1.5% to 2.5%. It was completely volatile, but the markets towards the end closed at the lowest point of the day. The Fed hiked interest rates by 75 basis points as expected and sent mixed signals about the outlook. The FOMC said it will consider the cumulative impact of its moves and the lags at which they affect the economy, implying it may slow the tightening pace. At the same time, Mr. Powell said fresh data since the last meeting suggests the ultimate level of interest rates will be higher than previously expected. Broadly, they are going to increase the interest rates, but at the slowing pace. Singapore Nifty is down more than 150 points. The macro factors are unfavorable. The dollar index jumped to the levels of 112 and the 10-year bond yield is at 4.1%. Technically, after a promising uptrend rally from the levels of almost 16,800 to 18,150, 200, we are going to see some corrective pattern in the near term. On Wednesday, the market has formed double top sort of formation on intraday basis, and it was very close to the levels of 18,050 towards the end. Today 18,050 is going to act as crucial support levels for the market, but based on Singapore Nifty, we are going to see opening somewhere close to 17,900, where the market is having excellent support. In the past, whenever the market was trying to move upward, it was finding resistance between the levels of 17,800 to 17,900. Now that resistance is going to act as support for the market. So if we see the market is dropping below the levels of 17,900, then the strategy should be to look for adding out of the money call options between 17,850 to 17,800 with a stop loss at 17,800 on a closing basis. So if we see the markets are closing or trading below the levels of 17,800 towards the end, I mean to say in the last half an hour of trading, then we should look for exiting out of those call options. And we are of the view that the way overall formation the market has formed, 17,800 should act as very good support for the market. If the market holds above the levels of 17,800 for the next few days, then it will be positive for the medium term trend of the market. In that case, again the markets would try to retest the levels of minimum 18,000 and maximum could be 18,300. For the Bank Nifty, there also we saw sluggish activity. It was down, but again 40,600, 40,500 would be support area for the Bank Nifty. Below that, the psychological support level at 40,000 will act as major trend decider level for the Bank Nifty. There also we should be buyer in select companies with a short term to medium term view. For the day, we need to be more and more stock specific, and we need to see that how the market reverses from the levels of 17,800 and which other sector performs. Based on that, we can take call in the market. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me and have a great day to all of you.